Good morning, it's the 19th of August. We are Signal Centre Talking Ball. I'm Joe, joined by Steve and Jamie. Happy Friday, lads. How are you both doing?
Yeah, not bad, thank you. Not
Yeah,
bad.
all good, thanks. All good.
Excellent. Made it to the end of another week. I know I've only been here since Wednesday, but it feels like it's been a two-week long week.
It's not
Yeah,
good,
it's
Joe,
dragged
is
out
it?
this one, hasn't it?
Yeah.
Mm.
All good though. Right, let's get stuck into the latest headlines and then we can take a look at some charts and what's moving on the markets today. So starting off with headlines, the Philly Fed number provided some relief yesterday to the markets. The manufacturing index strengthened to 6.2 for August from minus 12.3 the previous month. That was significantly above consensus forecast of minus 5. The new and existing orders components remained in contraction territory, but there was net improvement for the whole month, while shipments maintained strong growth. The Fed keeps the September rate option open. The San Francisco Fed President Daly stated that the rate hike to 50 or 75 basis points would be acceptable at the September meeting. She also added that she wants a raise and a hold strategy, which suggests a lower peak, especially as she also warned that she didn't want to tighten more than necessary. However, there was some hawkish comments as well. The St. Louis Fed President Bullard stated that he preferred a 75 basis point rate hike at the September meeting, and the Kansas City head stated that the financial conditions have eased due to expectations that the Fed will slow down, but this does not represent the Fed or how the Fed is thinking. The dollar continued to strengthen yesterday, posting very strong gains over the past 24 hours and now trading at a 1-month high. The hawkish Fed rhetoric contributed to gains, while the underlying euro weakness and further losses for the Chinese yuan were key elements in boosting the US currency. The yuan is now at its lowest level for 2 years. As expected yesterday, Norges Bank hiked rates by 50 basis points at their latest policy meeting. That was pretty much in line with the expectations. And this morning we've had some UK consumer confidence numbers, and that came in at a record low. However, there was a slight increase in retail sales. The consumer confidence index retreated to a fresh low for August. The retail sales data, however, was slightly stronger, with stronger than expected, with a 0.3% increase in sales volumes for July. So some mixed news out there still. Dollar very much dominating things yesterday, and again the number one performing asset class. So let's take a look at some other bits and pieces and have a look across the assets and see what's doing what. Steve, do you want to kick us off with some crypto analysis?
Yeah, definitely. Just thinking about that retail sales increasing slightly, Joe. I think that's everyone going out and buying new jumpers because we can't afford to pay the energy bills.
Yeah,
So it could be that, or skateboards maybe, because we can't afford to fuel our cars.
yeah, that
Don't
could
know.
work. Or electric
It'd be nice to
scooters,
see.
maybe.
It'd be nice to see. Oh, don't know about electric scooters, mate. We've got to charge them somehow.
Oh yeah, of course.
Solar powered electric scooters, maybe.
Yeah, that could do.
I'd like to see the breakdown on that retail sales, and we can find out exactly what's going on. But
Yeah,
anyway,
we're going to
let's
start seeing people shearing off sheep in the fields, aren't we, for their wool, creating
yeah, exactly.
blankets.
Yeah, with those shearers which you can use by hand. Yeah,
Yeah, oh, of
obviously not
course,
the.
yeah, yeah.
Dear oh dear. Anyway, let's get on to something a little bit more serious. Only a little bit more serious. Bitcoin. Um, we saw a really strong rejection overnight, and well, yeah, in the last sort
Wow.
of like 12 hours, yeah, or hour even. Price action was forming an ending wedge type formation. You could be it could be called an ascending triangle formation. Whatever it was really struggling to break and hold above the resistance around about the 24,500 to 25,500 area. The Ichimoku cloud gave us an idea that would be resistance there. So that's held really nicely and turned around. We've broken down below the 21-day moving average. We mentioned that on the 17th. And yesterday was quite a quiet, muted day. We managed to form a lower low, and today it's really broken down quite aggressively. Again, this could be a bit dollar based. We'll dive in and see how the dollar's performing. I think it's doing pretty well and looking to move a lot higher over the coming days, weeks and months. But yeah, nice little breakdown. We got down to and stalled at 21,400. Next level of support for me, which is really the only thing I'll be looking at on this, the support levels rather than resistance levels. 20,700, and below that we've got a nice band of support between 19,000 and 17,700. So Bitcoin definitely on the back foot. Let's take a look at Ethereum. That's just breaking through the 21-day moving average. So that's around a key level, which if we look back, the 1730 level has been pretty significant on multiple occasions historically, and breaking up through there, we saw a nice pop. But yeah, that'll be a level to watch, 1730 in Ethereum. A break below there, I'd expect to see the move lower accelerate. Resistance, we managed to get up to previous resistance levels just above the $2,000 level, but now really everyone looking for the exit at the moment. Let's have a look at stocks, leave them for Jamie. Let's have a look at gold. Gold under pressure as well. The dollar strength really sort of piling it on gold. Again, I'll just keep to the daily chart. The downward trending resistance line, which is pretty solid now. That's multiple touch points on this downward trending resistance, and we can draw a bit of a channel which has got multiple touch points as well. So this is a nice sort of look at where the trend has been since March, this downward trend, after we posted close to the all-time highs on the 8th of March this year. 21-day moving average, we broke below it yesterday, and now sort of like pushing forward on that. We are trading around support at 1755. Next support level, really not much between here and I would say the 1740 level, then 1710, and then this big area of support. Again, you can see the multiple touch points that we've had on this down at 1675 to 1680. So gold on the back foot also. Silver likewise broke through the 21-day moving average a couple of days ago, and you can see how the Ichimoku cloud also capped this this rally higher, this corrective rally, and we've extended and are on the lows as we speak. Lows we haven't seen since the 28th of July, so like a fair few weeks ago. This last time we were down here. We should run into support just in front of the maybe the $19 level, 1907 highlighted here, and then the major support really down below at 1815. Crude oil has continued this this grind lower also, although yesterday we saw it fight back. We've seen this formation now looks to be a little bit of a bottoming formation. Let's try and sort of like highlight it. Now, normally a morning star reversal is 3 candles. However, if we merge these 2 candles, we get the similar sort of price action that goes on in a morning star reversal here. And yesterday's rally after a doji indecisive candle on the 17th on Wednesday is pretty decent to look at, and quite and as we've stalled, I know we've made a lower low, but we could potentially, if we manage to break above yesterday's high at around $91, 90.96, we do run into the 21-day moving average again, which seems to be performing quite well on this chart as well. So really plenty to watch on the crude oil side of things. It does feel like we've had a pretty decent sell-off since June. Maybe there's a little bit of a base forming here. Definitely sort of like have to watch this over the coming days. Brent crude oil, similar sort of price action. Morning doji star formation formed. It's a bit cleaner on this chart. And yeah, we're on the back foot this morning, obviously a little bit dollar strength, but yesterday's really positive looking show could be showing us that maybe we're getting a base here. Natural gas, finally, this is the one to watch. I'm a bit spitting feathers, shall we say. We'll get to it on the gun to head trade idea. This is what I faded yesterday. Unfortunately, I was stopped out before it hit my target. Very annoying indeed, but yeah, it feels like the similar sort of approach this morning. You may get it wrong once or twice, but if you've got a really decent risk reward target on fading in this area, then that may still play out to be quite a nice level to either lighten the load if you're long of it, or just fade it for a small retracement lower.
Nice, thank you, Steve. Okay, let's take a look at FX then. So starting off with the dollar index, as we always do, and it continues to move to the upside quite nicely indeed, really. So overall, long-term trend remains very positive. We saw this correction take place for a number of weeks, pulling back to close to a 50% fib level from the lows that we posted back here in May. Then we saw this impulsive move to the upside that was posted on the 15th of August, and prices really haven't looked back since. Really strong session yesterday, very impulsive indeed, closing on the highs. We're on the front foot again today, up by 0.13% as things stand. So we look to be heading back towards those highs that we posted back in July. We've got resistance at 108.74, but the actual high that was posted came in at 109.29. So above that, we'd be looking for the 78.6% fib level on a longer term basis, which is up at 110.25, and then we've got further resistance above that at 111.31. So overall, looking very positive indeed, and of course having an impact on anything that is linked to the US dollar. So let's take a look at Euro US dollar. Continues to trade in a downtrend. Not very nice at all. We formed some sort of corrective wedge here. We saw the breakout on the same day. We saw the dollar breakout on the 15th, and prices have continued to move lower. Really horrible day for Euro USD yesterday, and it looks to be moving towards parity once again. On the last attempt at moving to parity, it was pretty well defended, as you can see here, this red line that we've got on the chart, which then prompted speculators to jump in and drive prices higher. But it was only corrective. It stalled into resistance at 103.48, and now prices are moving lower. So from a technical perspective, actually moving quite nicely at the moment on a technical basis. If we take a look at cable, we can see here that broke down yesterday through some local supports that we had on the chart at 120.00 and has continued to move lower. Offside today by around 0.1% as things stand. The lows that we posted on the 14th of July look set to be challenged again. That's at 117.60. And below that, it looks pretty ugly, to be honest. There's a lot of white space to move into. Then we'll be targeting the lows actually that we hit at the height of the pandemic back in March 2020, which is all the way down at 114.10. So pretty scary stuff. There is potential, I would say, for this to be forming some sort of bottom, provided that this level isn't taken out. If it is, then it just completely invalidates that theory. But there is maybe some potential for this to be in the stages of bottoming out, but it's highly speculative. Obviously, I'd prefer to go with the longer term trend, which of course remains quite negative. Looking at Aussie versus the US dollar, we saw a corrective channel form here on the daily chart. We saw that break on the 17th of August, so it didn't actually break down in the same way that we saw Euro US dollar do. But overall, it still looks pretty much the same. We've got a sequence of lower highs, and therefore we're looking for lower prices towards potentially the lows that we posted back on the 15th of July. Take a look at dollar CAD. That had a really good day yesterday as well. Seems to have found some support around 127.67, and prices have continued to move higher. So it appears to be a large range really here on the daily chart. The resistance up here we'll be looking for is 130.76, and of course this high that we posted on the 14th of July, which is all the way up at 132.23. If we look at dollar Swiss, that had a really nasty correction on the downside. It didn't hold the support level that we had here, the big band of support that we had on the daily chart. It did overshoot that. Based on that candle there that you can see, the 10th of August, a pretty horrible break to the downside, but then the bulls have come back to defend it. There is still a sequence of lower highs So we need to bear that in mind. If we can take out this high here, or these two highs that we posted at 96.51, then that would potentially open up the upside for a continuation higher in the short to medium term. Dollar yen yesterday had formed some resistance at 135.56, but we closed above it yesterday and we are pushing higher today. So I wouldn't rule out a move back to the highs on this at 139.38. And then above that, we've got a big psychological number at 140. Overall, trend still remains very strong and no signs of it slowing. Let's take a look at indices and start off with the DAX. So we saw a break of the short-term trend. So potentially ending, this correction is ending in the short term. We saw prices form a bit of a doji candle yesterday, so a little bit of indecision. We are offside today, 0.4% roughly. And there is potential for this to continue moving lower following the break of this short-term correction. In terms of target levels, we've got support around 13.022. This is this black line here. That could be potentially targeted in the short to medium term. Maybe it's forming some sort of bottom, but it needs to do an awful lot more. I mean, ultimately, I just think we're going to see more range-bound, choppy, and volatile price action on this for the time being. Take a look at Nasdaq. Showing signs of starting to roll over. It's coming up just shy of a 50% fib level, and this red line of resistance that we have as well at 13,953. Nothing really stand out on the candles that we posted over the last couple of sessions, but potentially, as I say, starting to roll over. So keep an eye on that. S&P 500, similar sort of situation, coming up just shy of a band of resistance that we've got on the daily chart. Nothing spectacular in terms of individual candles over the last week or so, really, but maybe some signs of it again starting to roll. FTSE 100, that's hugging around the 78.6% fib level. We've seen prices starting to flatten out a little bit. We posted a low yesterday at 7491 before then staging a bit of a comeback. If yesterday's low can be taken out, then that may indicate we are starting to roll over and could see a little bit of a dip in the short to medium term. But nothing really standing out on the indices at the moment. And they still remain quite elevated following the recent corrections that we've seen. And obviously the key question is whether or not they can hold on to that, which based on the volumes that we've seen, that's dragged this market higher, or all of these markets higher, it hasn't been particularly impressive. So we have to bear that in mind and remain cautious. That's it from me.
Like that, Joe. The main sort of thing I saw when you were walking through that is the difference in the, I suppose, the European indices and the US indices. Here you're sort of like, obviously with Nasdaq, as you mentioned, it looks like it's rolling over. Still need a bit of confirmation. 21-day moving average is still like 300 odd points away, and the same in S&P. It's still quite a chunk away, 41.54 coming in. But actually DAX, you can see it's right. It's actually touched it this morning. So it has tested that 21-day moving average. So maybe that is, if you're looking to look at these indices from a short perspective, maybe it's better to look at the European indices, shorting it rather than the US indices, which seem to be sort of like still outperforming from some sort of perspective.
Cool, Jamie, do you want to take us through some stocks? What's happening on the stock level?
Yeah, I will do. Actually, not too much yesterday, but there's a couple of things we can have a quick look at. Starting off with our biggest loser of the day, which is this CRMT, down 22.68%. You can see a pretty nasty gap down on the back of earnings. We'll have a look and see if there's any more information. America's Carmart fiscal Q1 earnings decline, revenue rises, shares sink Thursday. So pretty straightforward there, down 22.68%. Our biggest gainer is Drug, or Bright Minds Biosciences, which was up 121%. I had to read this earlier, and my understanding of this paragraph is the company just say they don't know why it's happened. They say they're not aware of any material undisclosed corporate developments and has no material change in its business or affairs that has been publicly disclosed that would account for the recent increase in volume or price. So they don't know what's going on. But yeah, up 121%. So I don't know really what to say about Checking out our heat map for the S&P 500, you can see that it gave me something to work with here, guys. I've got nothing. A lot of really flat days across the board. I guess what's standing out is Cisco Systems. We'll check that out in a sec. I think they had earnings out yesterday. Some of the smaller names in electric technology here, having quite a nice day. Energy had quite a good day. We'll come into some of those individual stocks there that are actually breaking out in some of the oil stocks particularly, which I thought was quite interesting. We will jump into a couple now. Start off with AMC, which was down another 10% almost yesterday, just under 10%. Had the squeeze we've talked about. The last two sessions we've sold off quite aggressively. Where could we be heading now? I mean, we've got a 50% fib, but there's not too much. There's a little bit of structure here, a little bit of resistance, but I don't particularly trust that level. I think the area where more people are likely to get long is around this 78.6 fib, which is still a fair way away, but we've also got this previous support and resistance, which we looked at the time it was there. We actually traded this level back a while ago. So if we do get all the way down to here, I would expect some buying to come in, but I think it would struggle to get back up to these highs unless we do see something similar in terms of a bit of a squeeze. Bed Bath & Beyond, we checked this out over the last couple of days. We found out about that guy in America who received a small loan of $25 million from his uncle or whatever, and made a fortune on this. I'm not sure, did he actually end up selling them all? Did he get out of it? I think he sold up here, didn't he?
I think the board actually were being urged to cash out and see it as a gift as well. Obviously, we've had, is it one of those, is it a Wall Street bets sort of driven
it is.
move?
Yeah.
Yeah, so, I mean, this is the time of year, if you know, you're going to participate in something like that you want to have a go, because obviously the volumes are light. You haven't got much institutional participation. So if the retail army are going to have a say on anything, then you know, certainly summer is the time to have a go at it. And it's definitely worked out here very nicely. But I wouldn't be surprised if you do start to see some insider selling. So insiders, obviously people that own stock that are part of the company or on a corporate level. So maybe that's what we're going to start seeing here, and it's going to unwind a little bit, because that's a big old gift they've been handed there.
Never look a gift horse in the mouth.
Yeah, absolutely.
Exactly. I mean, it's been quite a crazy move, all the way from like $4.50 all the way up to almost $30. So yeah, you don't want to be sitting around on that much money if you're that particular guy in America. But you know, it's had a really nice move up. It was down almost 20% yesterday. We've hit this 50% fib, and looks like we've had some buying come in there. To me, the next key level, we've got the 61.8 fib, along with this support level you can see from back throughout early 2022 and late 2021. So that would be potentially a bit of a level to look at for some more buying to step in.
CFO sold 55,000 shares yesterday by the looks of things.
Right, yeah, I guess that makes sense. Which is really just a bit of a...
Cashed in a call 1.4.
That'll do, Donkey. Yeah. And when it comes back down to where it probably is the real valuation, when all the excitement dies down, buy them back. And you've locked in a nice little profit there.
Yeah, it'll keep him ticking over, won't it? I'm sure he's not struggling too much at the moment. Looking at Cisco, we saw that this had earnings after close on Wednesday. Looks like it beat expectations. Let's just drag this up here. Oh, only by a little bit. But that's enough to send the stock up. I think it was up 5%. I've lost it now. Yeah, 5.81% on the close. Obviously, quite a nice gap up. We have this gap here, which, I don't know, does that count as a gap being filled if it gaps back through it? I know the rules. But yeah, so volume picking up as you'd expect off a big earnings move. In the middle of nowhere, really. I'm trying to think. Where are we looking at? We've got this kind of resistance level up here. That's quite a nice level, potentially where people start getting short again. And that's going to be, I'm going to guess this is 61.8 fib. 50. Never mind. But yeah, some fib levels there as well.
Typically, that formation's called an abandoned baby.
Yeah.
So you sort of have all that price action, which we saw below, and you've got a gap either side, or some sort of island reversal or something like that. So
yeah, we'll keep an eye on how that closes today, and also where it opens. I think that would be quite important. I don't know if we've got any after hours trading we can check out. Not really. It closed at 49.50, so about the same level it was at 9 o'clock. So yeah, keep an eye on that. Interesting move. GameStop, similar to AMC, sold off a bit more yesterday, 6%. Come down to this 8.2, which isn't a bad level really. We've had some resistance here. So that could potentially be a bit of an area where people start getting long again. I just got rid of it. Let's put it back on. I wanted to just get rid of this because the other area I think is the 61.8 fib, which provided support back throughout June. So 2 levels there to keep an eye on. We've got Moderna here. We put out an idea for this short at resistance. I don't think we actually got filled, sadly, but this had 3 pretty aggressive selling days in a row. The volume starting to pick up too. And each of those days it closed near the low of the day. So it looks like we're heading back to this support level on Moderna. And like I say, the volume's starting to pick up there, so one to keep an eye on. Novavax, another 5.5% down. I mean, this still looks pretty nasty to me. Keep an eye on that. Pfizer, similarly, kind of moving with Moderna, not quite as bad, but a pretty bad day yesterday. Only down 1% actually, so it's not the end of the world, but heading back to that support level. Do we have anything else interesting? Palantir seems to have been breaking down a bit after it hit that 61.8 fib. A bit of a short-term head and shoulders top perhaps with, let me just quickly draw it on. So something like this. It's not perfect, but you can kind of see the sentiment that the bulls really struggle to regain the control here. They tried to get back in, but the sellers have stepped in. And that looks like it's moving back lower. What else do I want to? I want to take a look at some of these oil stocks because while Steve, you looked at oil and it appears to be forming a bit of a bottom. What's interesting is a lot of the oil stocks have actually been breaking out recently, almost leading oil itself. So we've got COP here. So this is ConocoPhillips. Yeah, that's ConocoPhillips. This has been ripping upwards actually after this aggressive sell-off we saw. Certainly the last week or so, it's had a really positive week. We've got CLR as well. This yesterday broke above this resistance level we had here with good volume as well, over 100% of the average volume we see and closing near the high of the day. CVX, we've not quite got that breakout yet. ExxonMobil, we're getting to it as well. So a lot of these oil stocks, and there's a lot of other names I could throw in there as well that show the same picture, are actually kind of leading the way there. And it's whether, you know, are they leading oil, or is there something that's not right with these stocks and they're actually not at appropriate levels? But for me, this is certainly good price action for anyone involved in these energy stocks. Finish off on Cineworld. We checked this out yesterday when it was opening. I think it was up like 18% yesterday, but it was down like 80 the day before, so I don't put too much into that. Down again 10% today. It's only been open for 27 minutes, so yeah, this one's looking pretty awful. I think we're at the lowest levels ever. Yes, there's not really much you can do. So quite a fall from grace since the kind of middle of 2019 when it was at its peaks, all the way down to 8 pence 68. So yeah, looking pretty rough. Obviously the volume this month has been huge because of yesterday's earnings miss, or I think it was guidance actually, wasn't it? So yeah, not too much else to report there. Flat on a lot of these stocks. I mean, it was all about meme stocks like it has been for last week, and the energy stocks are looking much more positive. So we'll leave it on the stocks today.
Thanks, Jamie. Ryan joined us on the chat on TradingView and has asked us a question about whether he believes, or we believe, stocks will follow Bitcoin with the crash. Obviously, we've seen a bit of a chunky move on Bitcoin overnight, as Steve mentioned. Well, what are our thoughts, chaps?
Yeah.
Yeah, you agree?
Is that just a short-term basis? Yeah, I think it's.
Well, let's have a look at cryptos again. Do you want to bring up the chart, Steve? Just have a quick look at what that's doing, just to refresh our memories. Off pretty heavy today.
Yeah, I mean it's obviously off more aggressively than the indices. I think it's maybe a little bit more dollar-based. So if you're comparing it to FTSE, probably not, because obviously FTSE has a lot of components which benefit from a strong dollar, so that will hold up. If you're looking at S&P and Nasdaq, potentially. I mean, the sort of like the strong dollar is driven by obviously the sort of like the really sort of like the interest rate story more than anything, I think, and further interest rate hikes. You know, it's it's sort of like reacted quite positively to what the Fed had to say, potential for further rate hikes for a longer period of time. So yeah, that could impact negatively on some of the components of the indices. So I don't see why not.
Just
Not that
one
I
thought on that, maybe Steve, is that maybe Bitcoin or cryptocurrencies are an indication of risk, maybe, and if that's starting to move lower and you're starting to see people sell it or get out, that could be an indication that they're giving up on some of these riskier positions, thinking that maybe this latest rally has maybe run its course. Maybe it's a bit of a leading indicator for risk. I don't know.
Quite possibly. Yeah, I mean, you've got to think about it. We've had some really big moves historically, especially in the last couple of years, where cryptocurrency positions, people who've sort of like along of the Bitcoin, which most of the market is that way, although it doesn't sound like that can work, but people are basically there to sort of like to buy and to sort of like to hold it. They're not looking to short it. So when they have say the stock markets move offside or move against them in a few times over the last couple of years, as I say, people have had to cut their crypto position to fund their portfolio of indices and stocks.
Yeah.
So yeah, I mean, like Joe said, it's actually starting to turn into a leading indicator. So you'll see the move in the Bitcoin first, and then you'll see a little bit of follow through on the indices. Yeah, there's plenty of argument both ways, I think, with it. So yeah, but I wouldn't just sit here and think, right, okay, Bitcoin's come off, we'll sell indices. That's you need to have more than one reason to sort of like have that approach. It's not just a sort of like one for one. So yeah, be careful with that.
Yeah, I mean, in terms of our view on indices on the sort of longer term, just to come back to that because we haven't mentioned it really this week, but this is the Nasdaq weekly chart, and I think I'd be using Nasdaq as maybe the best. I mean, obviously S&P is a broader index with 500 stocks, but the Nasdaq is obviously where a lot of speculation has taken place over a number of months. This is a weekly chart, and what we'd highlighted previously was a large top pattern that had formed here. The rally higher, we would have expected from a technical perspective for this to rally into the neckline of this top pattern, which we've got highlighted here by this red band. We've also got the volume point of control. So this is all the volume that's happened effectively throughout this entire rally, and where the most of the positions are actually held on an average basis. And it comes in at this red line here. It has overshot that. But as we've mentioned on a number of occasions over the last couple of weeks, the volume hasn't been particularly great. So I still feel there is potential for quite significant downside in a lot of these indices over the medium to long term. And in terms of measured move targets of what this top pattern indicates, it is quite a significant move lower that we're actually expecting if the technicals are to win out overall. Actually, targets for the Nasdaq come in around about 9,133, which is quite close to a 78.6% retracement of this entire up move. So, in terms of where the bottom is, I don't think we're anywhere near it yet. I think this is just a corrective move on not a lot. And that ultimately we will see stocks deteriorate over weeks and months from here. Sorry to paint that negative picture, but it's just how I see it, basically. And I think if you look at the backdrop of the economy, rising interest rates, rising inflation, I don't think we've yet to see the real impacts of that on the on the ground level, really. Energy costs, etc. As I think we approach the winter, I think it's really going to start to bite. Would be my take.
Yeah, absolutely, Joe. And there's one more thing I'll point out on the Nasdaq. So when we did hit the top here and we had the sell-off, we drew. If you drew Fibonacci in, you got a. Let me just get rid of this one. You had the reaction higher stalled at the 61.8% fib, and then we had this extended sell-off. So 61.8% fib, and then the start of the new sell-off. You take the price action from there, and lo and behold, we're around the 61.8% fib. So, and it's a nice reversal formation. So for me, yeah, it's a good risk reward area to fade this move. That's what it is. Be tight with a stop. Don't sort of get loved up to a position, especially if you're going short against these indices. You never know what the powers that be might come up with to underpin this market in an illegal And
Well, I
why?
mean, not illegal, but obviously the market has come to the rescue of the market on a number of occasions with, QE measures and low interest rates. But I don't think we're going to see that this time. I think there is a big shift that a lot of people won't have seen previously. And this sort of faith in always buying the dip at some point, I don't think is going to be an effective strategy. So we'll have to wait and see.
Yeah, maybe not illegal at the moment, but I
At
suppose
the
in a few years' time, we'll look back and say, oh, that wasn't really something you should have done. Naughty little bankers.
Yeah. I actually read something quite interesting on the car front, actually. I don't know how relevant it will be to the markets, but maybe a good indication of the economy in general. During the pandemic, obviously, there was a lot of people buying particularly new cars. That's why we've got a shortage of those. Obviously, we've got the chip issues as well. But we've seen a really big move to used cars. I think it was up 44% something over X amount of period. But obviously people are ditching these leases that they've got because they can't afford them and looking for used cars instead. Also, there's been a lot of repossessions on those cars as well. So people during the pandemic who had a few extra dollars or pounds in their pocket have gone out, got these new leases on cars, and now realizing that they can't afford them. And I think when you start to see maybe a bit of a wave of that happening, then that won't be good for the markets either.
No, I think also it needs a little bit of high unemployment to sort of like to really finish us off, doesn't it? It's sort
Yeah,
of
but
like it's
unemployment's
that.
at like record lows. Employment's at record highs, isn't it?
Yeah,
Unemployment at record lows
yeah.
in some
It's
countries.
funny, yeah, but you're still seeing people really struggling to get and retain staff. That you
Yeah,
sort of like you're seeing, especially in the retail industry, the sort of not entertainment, the venue in the sort of like restaurant and
travel and leisure.
travel and leisure. Yeah, people are sort of sometimes you look around and they just like they're very disillusioned with what's going on, and yeah, every job seems to be below them. So yeah, there's lots of things to get excited about as we progress through the 2020s.
Yes, absolutely. Okay, let's move this on. That was hopefully insightful for people, but yeah, just our thoughts, of course. And
If you liked it, press boost.
yeah, press boost if you liked it, or send us some coins or something. I don't know. Um,
I
okay,
feel
gun to
like
the
a
head.
busker now. I feel
Yeah,
like
I
a
know.
busker.
Sing, Steve.
I'm
Um,
singing the tune.
Okay, gun to the head challenge. So this is where each of us pick a live trade on the video each day, and all of these ideas that we post or publish must have a stop and a target. They're all placed at market. It is just a bit of fun. We are just calling it as we see it pretty much right now. Not an awful lot of thought or effort has gone into them. We're just trying to see something that stands out on a technical basis on the short-term charts and hoping that it works out between now and 9 o'clock tonight, or when the stop or the targets are hit. If anybody wants to, Ryan, thank you very much for that. He sent us some coins. I was only joking, but that is very much appreciated. If anybody wants to check these ideas out, then please feel free to do so. You can check them out on our Signal Center profile on TradingView, Signal_Center. These ideas that we're just about to go into now are published here. Sadly, yesterday it didn't work out very well for us. Jamie, you were selling DAX. If we click the play button, we can see how that worked out. Got stopped out, but then it's just immediately reversed and coming pretty close to your initial target. And that is the game, sadly. That is what happens time and time again. And it's why it's really important to have really strong risk reward ratios on your trades as well, because when you do get these winners, you want to make sure they're much, much bigger than your losers. If we look at Nasdaq, similar situation, both looking at indices. I was looking for that to move lower. Initially, it did. It was really nicely on side. And then it died. It hit the stop loss and it came back and just jumped around quite a lot, really, quite choppy indeed yesterday. But yeah, it didn't work out. And Steve, this is just sickening. Selling that gas, highlighted a short-term head and shoulders top, looking to sell into the resistance of the shoulder. And yeah, got stopped out here and then bang, straight to the target. Really, yeah, quite sickening stuff. But
Pain.
this is what we're seeing. The lack of volume is creating these volatile moves in markets, and intraday it's really choppy. So do be careful if you're looking at anything on an intraday basis at the moment. So we've got to dust ourselves down, gents, and we've got to go again. And anybody got a trade idea they're looking at? They want to have a poke around on? Jamie, I reckon you're ready.
Yeah, I'm ready. I can roll. So I'm actually having a look at some of these indices which we've been discussing. I'm looking at the US markets, and the one that to me, I mean, they all look relatively toppy. Obviously, it's difficult to kind of call the top while it's still happening, but I'm looking at the Russell 2000 here. For me, why I'm looking at this particularly is we saw this real big aggressive sell-off. What was that, on the 17th, so on Wednesday. Since then, we've again formed a bit of a flag type pattern here, where it's just kind of the market's just drifted sideways. And I'm just gonna. I did this with the DAX yesterday, and it didn't really work, but I think it might. This sell-off might continue. Like I say, so from 4-hour perspective, it just looks like we're running out of steam. The dips aren't being bought into as much. It's not sustaining any rally. So for me, that suggests maybe there's a bit of a deeper correction here to come. Let's have a look. Where can I target here? Let's get some fibs out from this low. Yeah, we're running into that 61.8 fib nicely. So we are going to look to sell the Russell 2000 at current price, which is, let me pull this, 1989. There we go. There we go. 1989. We'll keep our target, like I say, at that 61.8 fib. So that's going to be at 1953. And our stop will move up to 2002. So hopefully, this does play out today. I mean, you could kind of move your stop above the wicks. If this is going to break down, I don't think we're going to be even getting to as high as this level. So, yeah, hoping for a bit of a move lower on the indices today. This would give us 2.77R if it does come off. So, yeah, let's wait and see on that one.
Steve, you got one ready?
No, not quite. Have you?
Okay, yeah, sure, let's go. So I'm looking at Eurostoxx 50 again, banging the drum on indices, thinking that at some point we are going to get a rollover. Maybe today could be the day. Looking at Eurostoxx 50, I was looking at it on the intraday chart, which was really appealing to me. So this is the hourly chart on Eurostoxx 50. Just eyeballing this, looks like we've got some sort of top pattern in place in the very short term. You could potentially highlight a head and shoulders top here, that being the left shoulder, this being the head, and then we've got some complicated looking right shoulder going on here, potentially two shoulders, one here, so it's just incorporate all of it. So I'll be looking for something like that to play out. It's a downward sloping one as well. It hasn't broken yet, so it's only speculative at this point. Ideally, you'd wait for the break of the neckline before you get involved. But the other thing that interested me actually was it looked to be a pretty big gap lower on the chart on the hourly. I don't know if this is accurate or not, but I'm going to go with it anyway. We gap lower between 6 a.m. and 7 a.m. so on the open here, and we've just filled this gap in the last few minutes or so. So we're trading above it at the minute at 3,766. So that's where I'm going to sell. I'm going to put a stop above this proposed right shoulder, which comes at 3,785, and I'm going to target a move down to a cluster of previous price action down here at 3,707. I think I was looking a bit lower than that actually. Let's just go for a round number, 3,700. So looking for 3.63R on that one today. So yeah, hopefully that plays out, and that's going to be published right now. If anybody wants to check it out, I'll just change the figures slightly because they've changed.
He's fiddling with the figures. He's fiddling with the figures.
All right, I won't. I'll leave it then. I won't touch it. I don't want to be accused of cheating. So that's being published now. And if anybody wants to check it out, feel free to do so. Steve, what you got?
I feel a little bit similar to you, Joe. I'm sort of looking at the European indices and trying to find a good risk-reward trade in there. If you look at the weekly chart, we've obviously got the potential for this to be the first losing week in 5. On the daily chart, we've got the reaction lower after the bearish engulfing almost candle. Maybe not quite a bearish engulfing, but close to it. even close to a bearish outside candle, so negative candle that we saw on Wednesday, a bit of indecision yesterday. We've opened up low this morning and we've rallied, so it's forming a bit of a bullish hammer from that 21-day moving average, but I think that might be just an initial morning reaction. On the 4-hour chart, we are below or poked below the Ichimoku cloud, so that was negative. We're pulling back now, but we get some light European selling into the morning. This could reverse quite sharply. So I'm looking at resistance level comes in around about the top of this. So this is quite a punchy risk reward. Looking at selling here at 13,652, targeting the move to 13,037, 600 points today. Why? What would make that happen? No idea. And the stop is at 13,840, which seems like a long way away. I'm going to bring that in, that stop. Let's bring it in to 752. Give us a 100-point stop. Sorry. 13,752 and targeting a move to, let's bring a bit more reasonable, shall we? Let's go here. 3-to-1 risk reward. That's a bit better. I felt a bit silly, really, with looking at 6-to-1. How many times does a 6-to-1 shot come in? Who knows? Yeah, that's my trade idea for the day, targeting a move to 13,352. Sounds better.
Yeah, lovely. Good luck to both of you. And as I said, if anybody wants to check those out or follow the progress of them, you can do so via the TradingView profile. Just another question from Ryan about why Aussie fell so hard the other day. I think there was a combination of reasons, really. Over the weekend, we saw a small cut in Chinese rates. There was also some Chinese data that disappointed on the retail sales side of things and the industrial production growth. So I think that had a pretty negative impact on Aussie, obviously being linked to metals and raw materials. The Aussie currency it would have been impacted by a slowdown in China. There was also the Royal Bank or Reserve Bank of New Zealand, sorry, they hiked rates as well. So all of this combining would have had a negative impact on Aussie and sent it lower. And of course, the dollar strength as well.
And the RBA came out with minutes as well, didn't they? I think they came out with minutes at some point this week.
They may have done. I was just checking back through our notes and I couldn't see anything, but that may be the case as well.
We were tucked up in bed at the time, Joe.
Yeah, absolutely. So in terms of what's coming out today, we've got Canadian retail sales that's due out at 1:30 UK time, and then we cast our attentions to next week, and we've got PMI reports from Europe and the US. That's out on the 23rd, and then between the 25th and the 27th, we've got the Jackson Hole Symposium, which is always a pretty well-watched event and can have an impact on the markets. We'll go into more detail next week about what that is and what you need to be looking out for. So make sure you tune in on Monday. Anything else to add, gents?
No, all good here.
Hey, 52.
Good from me.
Be careful out there.
Yeah, fantastic weekend, and we'll see you next week. All right.